Awesome. I'm sure we'll have a couple more joining us yet. So, okay, welcome everybody. My name is Patrick Metzger with the Greenhouse, and happy to have Brett Colliton and Gary Schneider on here with Jay Galt today. And we're going to talk business credit today. So, talking through how to minimize your personal risk and shift your credit to the business component. So excited to have few experts on here from Jay Galt with us. And then before we get going, also Kawar Farouk, he is our Director of Business Development with the Greenhouse. He is on here as well. And then just a little bit about the Greenhouse as a whole. So those of you that are not super familiar with us, we are a business solutions delivery company based out of West Fargo, North Dakota. We work nationally and beyond with everybody from startup entrepreneurs all the way through exit succession planning. So we offer everything from EOS to leadership coaching to very niche strategic management consulting, exit succession work, like I said, and beyond. So I did drop an item in the chat there, just kind of some marketing collateral for us. You can check out kind of all our offerings in that digital booklet there. So, but yeah, excited to have Brett and Gary start the show here for us and lead us into a little bit about how to minimize personal risk around credit. So Gary, Brett, I'll let you guys kind of run with it from here.
Well, yeah, so I'll first introduce myself. I am the regional rep for this area. So as you have follow-up questions, I will be the person that you'll reach out to, and we'll connect and I can help. Gary here has 30 years of experience as an executive at JP Morgan Chase. He's going to kind of explain what goes on behind the curtains in the banking world and why you're getting approved, why you're getting declined, and some secrets as to how you can start stepping off on your own. So I'm going to let Gary go and take care of it from here.
Thanks, Brett. Boy, to hear you introduce me, it sounds like I'm so ancient. So my gosh, we try to make it as fun as we can, though. So yeah, we can have some fun here. So I do guarantee that after we're done here, there will be some concepts that will be quite new to a lot of people. Hopefully not everything, though, because everyone here is involved in business. You kind of know what's going on. But if we can look behind the curtain a little bit, understand what you're experiencing, and maybe ways to mitigate some of the challenges that a small business have, then we can consider today a success. And again, a big thanks to Patrick and to the Greenhouse for the sponsorship. It's because of people like that making the commitment to expose the business community to great ideas and new concepts. That's how we all prosper. So hats off to you, Patrick, and to the whole organization. So we're going to talk about unleashing the power of corporate credit. Sounds pretty darn boring, but I think we'll have some fun with this as we go through it. So maybe just a little bit of, oh, here we go. Let's get to this. A little background. So as Brett mentioned, I've been involved in the industry for a little while. Most recently, I came off of an 18-year career with JP Morgan Chase. I led a team of business bankers in the city of Chicago, right down in the Loop. And we competed with the best that the big banks could throw at us. So we like to think we had, really firsthand experience. It's live bullets flying when you're out there doing that kind of work. And for the most part, we generally prevailed. And so with it, you learn a heck of a lot in the marketplace. And so I'll borrow from some of that experience. And as Brett mentioned earlier, we're going to talk about what actually is being considered when your business is looking to apply for credit, maybe why you're hearing the answer no, and more importantly, ways to move around that and to take this information, harness it, and allow your business to move forward in spite of a pretty challenging economy. So let's talk about a couple of things. So ask yourself these questions. Have you ever used your personal credit when you're trying to deal with expenses for your business? Well, think about that. You might use a credit card. That's personal credit. Have you loaned money to the business? Well, I would hazard to say almost everybody here has, if for no other reason than when you started with your LLC, you had to pay the fee. Your company had no credit profile. It didn't exist. So yes, you lent money to the business. And so then as the business gets up and gets going, you want a place to operate. So you look for a place to hang up your shingle. And you have to use personal credit there because the lessor is not going to just give a place to anybody without some kind of backing, some sense of who can actually pay the bill. So You're going to actually use your personal credit for guarantees there. So then you say, okay, I want my business to continue to grow. I want to do some extra things. So you use a credit card. And so how do you do that? Well, you use your social security number because your business has no credit. It's a legal entity that you formed, but it has nothing, no backing behind it. So again, you see here the direction. There's more and more of your personal involvement, your personal commitment and resources being lent to the business, including the part that the bank always uses. Have you personally guaranteed a loan for your business? Now, there are some types of credit facilities. Here's a little bit of behind the scenes stuff. For example, everyone here probably has heard about different lending programs offered by the Small Business Administration, the SBA for short. There is no SBA product out there that doesn't require a personal guarantee. So one of the best programs out there for small business absolutely mandates that you have your personal guarantee. Or, I hate to say it, but have you ever been denied a loan because maybe your FICO score wasn't where somebody wanted it to be? What you see here is a stack of cards that is dealt against your business proceeding. It's meant to protect the various lenders, the people who are providing credit. So then the event that payment is not made, they have a place to go. And that place to go is you. So why do we incorporate? Let's figure out. So is it really worth it? So think about what happens when you form an LLC, limited liability corporation, or there's a variation on that called an S Corp. Either way, it sets up a legal entity that in fact can perform as a business person if you allow it to. And some of the benefits that you get are, one, there's some tax deductions. We all kind of know that. But probably one of the biggest things that we really are looking forward to is to separate the liabilities, that limited liability in the name, from ourselves. We want the company to be responsible for the activities that are involved in carrying out your business. Now, the reason for that is simple. You have an office or a building that performs services for offices. One of your people goes into an office, they get hurt or something happens, and somebody decides they're going to press you to the wall on this thing. They may even take legal action. Well, if you are the one person who represents your company, guess what? That legal action is coming against you as the business owner. But imagine if you properly set up the incorporation of your company, and now any legal action goes after the company, your personal liability is limited to whatever your company has on the line. So there's a really good set of reasons. Yes, there are tax deductions, and there's other benefits that we all sort of interpret, but you really want to limit that liability. So you want to make very certain you follow the rules. So let's think about what kind of credit can you get. So there's really three different types of credit. There's personal credit, which we've kind of been talking about so far. It's measured in things like the FICO score, which really stands for a combination of three different credit bureaus, which come together, form an average, and that average is used pretty universally across the business community. So FICO score, personal credit, all linked together. A second type is called business credit. Now, you might think, well, isn't that what we're talking about? Actually, no. Business credit is sometimes considered to be totally on the business itself, but it's not. In many cases, business credit is in name only. So I would ask anyone here, reach in your wallet, pull out a card, a credit card, and I would guess more than half, probably 3/4 of the people on this call will see the term business credit on that credit card, and we feel really good. The problem is that a business credit card does nothing more than channel those expenses to a particular card type, but it's still personally guaranteed. And you don't have to believe me. Go back, pull up your credit card agreement and look for that clause that says this card is personally guaranteed by the signer. So, okay, so it's sort of a halfway in between, but it really doesn't get you where you want to go. The third type of credit is the one that we all want. It's called corporate credit. Corporate credit is literally in the name of your business. It is totally reliant on the strength of your company. So imagine What happens when you have corporate credit out there? You've completely isolated yourself, then you allow the strength of your company. Now let's step back for a second. I want everyone just to imagine a scenario. And the scenario is this: you're the banker. I'll show you the differences in how this works. You're the banker, and two entities approach you asking for credit. Now you're going to make a decision here. One of the entities is the owner of a business, and that owner makes $100,000 a year. For some, that's mighty low, and for others, there's something to aspire to. But for this example, it's $100,000 a year. The other entity that approaches you is a company, and the company generates $1 million a year in revenue. Now you're the banker. Who would you prefer to lend to? And if you think about the way things are done today, the banks always lend to the business owner at $100,000 a year. But when you think about it, isn't the capacity of that $1 million business far greater? At least in this example, 10 times greater. So doesn't it make sense to turn the system upside down and get the business to start qualifying for credit that it can support? That's the importance. That's the magnitude. That's the kind of impact that you can have if, in fact, you've developed business credit. So, whoops, I went by real fast. So there are, in fact, 3 business credit bureaus, similar to the credit bureaus that work for your FICO score, but the names are a little bit different. So the bottom 2 you're familiar with. You've heard of Experian and Equifax. The difference is these 2 are actually divisions of those famous companies. It's called Business Experian and Business Equifax. It's devoted and focuses on purely business transactions. The big name that everyone's heard of, is called Dun & Bradstreet. Almost everyone's at least heard of it. They may not know exactly how it works. You hear of things called Dunn's number or a D&B number. And what they are doing at Dun & Bradstreet are trying to establish a standard that says, hey, if you get a Dunn's number or a Dun & Bradstreet number, you in fact are building your business's credit. Problem here is that's 1/3 of the answer. The answer is it's the combination of all 3 that make up your business credit score, not just the Dunn's number, nor Experian or Equifax. It's knowing how to build credit balanced across all 3 that determines how strong will your business credit score be. That's what we do actually at J. Galt. We happen to know who the 3 companies are, which vendors will report into those bureaus, what the underwriting criteria is for them, so that we can build a balanced credit score. And you can do this on your own too. It'll take you a fair amount of time, measured in 6, 7, 8, 9 years, or you can do a little bit shorter. So either way, this information is applicable. We're trying to equip you with ideas and concepts here. So why is corporate credit powerful? We talked a lot about this so far. So again, sharing a little bit of behind the scenes stuff, things that I tried to investigate before I joined J. Galt. So again, 18 years as a banker, okay, always doing things a certain way, very reputable company, very successful. So why would you go and make a change? So I went and asked my middle market counterparts. Those are the bankers who you'll never see in a branch anywhere, but they will call on companies who are pretty substantial in size, anywhere from, say, $25 million up to $1 billion in our company. And every bank has different thresholds, but you get the picture. It's larger companies who have been around for a while. And what I learned was that companies in that space almost never provide personal guarantees. You say, well, why is that? Well, it's because those companies have over time developed a specific and an essential credit profile that allows the banks and any lender to understand that they are credible. So think of any larger company in your locale. As a matter of fact, I'll take it even a step further. So we have a certain election coming up here, right? I think it's in November thereabouts, and there's a couple of candidates, and one in particular happens to have declared bankruptcy a number of times. Well, how does that work? Well, it's because the company that was being controlled there had the ability to establish its own credit profile, independent of any other company that was owned. And it can stand on its own. There's a lot of successful companies in that same portfolio, by the way. So this is by no means a partisan type of a conversation, but you get the idea. Companies that stand on their own have the ability to control their own fate. And that's a very important item. Now, the important part here is that virtually every company can do the same thing if you know how to do it and you know where to go to make that happen. We at J. Galt specialize in that, and that's why we're kind of talking to you today, at least to equip you that there is an alternative. So how do you develop corporate credit? Okay, it's got to be intentional. It's not the sort of thing that says, well, I have this card in my wallet, it says business credit card. No. Those cards rarely report to the business credit bureaus, but they do feel really good because it designates that your company name is on the card. Developing corporate credit requires very specific intentional steps over a period of time. So, we just crossed over the first of the year. Example I like to use. So how many of us have said, I'm gonna start off on a New Year's resolution. I'm gonna do something that makes me physically fit. So we think, okay, as of January the 1st, I'm gonna go down to the gym and I'm gonna really start getting strong. I'll use kind of a male-oriented term, but so please don't take any offense if you're not. But they go down to the gym, then they see these racks of dumbbells and things, they start pumping iron. And what happens? When you start pumping iron, you take your dominant hand and you use it and you get stronger and stronger. But what's wrong with the other hand? If you think about it, if you intentionally go and say, well, let me develop the other hand as well, now you're more than twice as strong if you develop them both. And in fact, when you coordinate the use of both of them, you've really achieved your goal of getting physically fit. It's the same thing when it comes to developing credit. If you intentionally go and work out on that less dominant hand, build the corporate credit because that's a muscle that's available to your company. Now your business is much more physically fit and it can do so many more things. So there is a way and a method. We'll talk about that a little bit. So here's just an example of one of the people that we worked with. Again, the mileage will vary based on the size of your company and what kind of activities you're involved with. But this is a company that started off, came to us, really had no credit of any kind. They started off at a very small business credit limit recommendation. By the way, we happen to see this is pretty common with most people we start with, a very low credit limit recommendation. We took them through a series of steps, a very specific series of steps, 7 steps to be precise. And you see how the credit continues to grow. And then we finished up with this particular company with a pretty healthy $750,000. Again, based on the kind of activity and business that was involved, this was a pretty good success. Then again, that will adjust based on the size of the business that's involved. So some people say, okay, fine. So, but isn't that really tied to the amount of revenue that you have? Well, let's take a look. So what we have here is a real live credit report. It's pulled from Experian. It's a company. You can sort of see it's in Michigan because we couldn't blank that out very well, but it generates about $2.5 million. You would think that should be pretty good for business credit. Now, I'm going to pause for a second. You can't answer me verbally, but if you would just maybe jot down on a piece of paper next to you, what amount of business credit do you think a $2.5 million revenue company should have? Takes just a second, just write it down, because I'm going to show you what Experian says they should have. So here's the answer. Is that shocking to some people? The reason here is that this company chose to allow all of the credit supporting it, all of the people supporting this company to use their personal credit score. So the company itself, even though it's a legal entity, never bothered to develop. It never developed that other arm I'd used to describe in that physical fitness example. It's a shame, but that's in fact the case. But so let's take one look at one more now. Here's a company much more modest in size. Again, it's Experian, the credit bureau. It's Experian, something we all know. Another company in Michigan, this time we didn't hide it. So now seeing what you saw, of course, I'm going to turn the tables here, but knowing what you saw, Can you imagine what the credit score should be for this much, much smaller company? In fact, it's about 2/3 of the total revenue, much bigger than that $2.5 million company. Why? The reason is that this company said, corporate credit is far more important to me, so let's follow a discipline, follow the process, so that, in fact, the company could help support itself. Again, there's no magic to this. It's about being intentional as to how you develop the business credit. And you can see the kind of results that you get from that, from doing that. So you say, well, how do you do that? Well, it's actually fairly straightforward, but there's got to be a discipline to it. So what we do, in fact, is to follow a 7-step process, because if you do something the same way every single time, you should expect the same kind of an outcome. So very briefly, we start with something that you think everyone would be doing, but in fact, very few do. We establish the foundations. We do an audit. What was the name, address, details of the owner that were used when applying for the EIN right when it started, when the business started? Is that information still correct? Is it still the same? You'd be amazed how many times, because of moves or different people that are involved, or just sheer time, that information is not accurate. So why would that matter? Well, imagine if you're trying to register a record for somebody, you send information back, but that record doesn't exist because the data isn't consistent. So you send all these transactions over to a credit bureau and basically it just falls on the floor. By establishing and doing an audit, you make that business a real live, viable entity that the bureaus now recognize. So what do? You establish the foundations, then you register that company with the 3 business credit bureaus, not just one. Now they're ready for business. They're like, send in the transactions. Let's see what goes on. So what do? We go back and we start with a number of companies, we call it trade credit, who are willing to provide some credit in exchange for doing business with them. Now keep in mind, we're talking about building the credit of a company that basically has no profile, no credit score at all. So you would think that, yeah, we need to get this wheel starting to turn. And by doing that, we start to see that credit bureau needles start to turn, start to flicker. And as we see that happening, we then go and say, now it's time to increase the capacity. So we go to tier 2 credit. Tier 2, like the name sounds bigger than tier 1. So yeah, in fact, we're starting to increase the capacity. Still, so much of this is based on the owner backing up the credit because the company still doesn't have a credit score. But now we're starting to open up more and more credit facilities. We're starting to get into some lower level credit cards, which means that a business is not relegated to just the companies who provide trade credit. They can start going to almost any vendor. As that takes hold, again, we're monitoring, seeing the credit bureau reporting going up, and we see now it's time for tier 3, just like in that example I showed earlier. At tier 3 now, we're starting to get into lower level banks, regional banks. We're starting to get some credit flowing, and we're starting to peel away that personal guarantee of the owner. The company is starting to stand on its own. That muscle is starting to develop and build. It's starting to actually make a difference. And so we monitor again. And when we see that credit needle go up again, then we get to tier 4. And just in the parlance of doing, building business credit, tier 4 is considered the top that you can get. Tier 4 is when your company is standing on its own. Tier 4 is when your company is that $1 million example versus the $100,000 business owner. And at that point, the company starts to become available, have available to it all types of credit cards, vehicle financing, equipment financing. You can kind of see on the slide here. It has full capacity. Now, think of why you get into business. Is it just to do a certain service or provide a certain product? Yeah, I mean, that's the essence of it, but it's to also build personal wealth. And so often as we're business owners trying to grow our business, we forget that fact that we're here for a reason. We want to build our personal wealth. I used to like to joke that if you talk to, let's say, a doctor, there's those doctors who really are concentrating on their business from 9 to 5. They're doing all the procedures, everything in the office. They're really good at that. But the really good businessmen start their day at 5 and they concentrate on what do they do with what they made from 5 to 9. And if you look at it from that perspective, you think about things like real estate financing, owning the building that maybe your business is operating out of, because you're going to pay rent no matter what. But imagine if you could be paying rent to yourself, as an example. Imagine the wealth building capabilities that come from that. But that takes credit. That takes the ability to be able to purchase a building and put yourself in that position. And you either do it yourself or you have your company do it. And so you can see here how the path just keeps opening up wider and wider, and it gets stronger and stronger, and it makes what you do as a business owner that much more fun. And it realizes the purpose that you got into business in the first place. Provide a great capability, provide a great product, and be able to benefit yourself and your family as a result. So when we provide this kind of a service to our membership, we do it with a very specific intentional approach. One, we want to make sure that our members are not left out there saying, okay, I paid for the service, and then when does it end? And then what do I have to do after that? No, 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 no. We provide a service that exists for the lifetime of the LLC or S Corp, as the case may be, because your business is going to continue to change. It's going to continue to evolve. How bad would that be if you get started, you get up and running, your business grows, and then all of a sudden, everything that you built for your business credit goes away? No. So we sign up, we're with the member for the lifetime of their LLC. We do it with a little bit different approach than you might expect. What we came to realize through the years of doing this, business owners don't want to spend time building their business credit. They just want business credit. So we switched our model. We provide what's called a concierge service, so that we have a certified credit analyst sit side by side with our member, virtually, of course, because technology allows us to do that. By doing it that way, we get to sit side by side, we get to understand the business, we get to discuss the kinds of vendors that are applicable to their industry and their particular company. We can go and we will then identify who they are. We will apply for the credit. We'll have the credit put in place, and then we'll bring it back to the business owner saying, let's get started. And so the business owner can then start to use the credit. And then what happens? The credit analyst watches. They monitor the credit bureaus. They see the needle of the credit score start to rise. And they come back to the business owner, say it's time for tier 2. There again, they lay out the different options, different vendors to work with. Try to use the same vendors where we can. But if those vendors are not reporting, we'll recommend alternatives. There again, once the business owner signs off, we'll go and apply for the credit. Put the credit in place, bring it back to the owner, let them start using it. So you can see how the cycle continues. But that takes time and effort, and it takes personalization. And that's what we do that separates us from almost any other service. Now you can do this by yourself, but hopefully you see that with the right type of hand-holding, the ability to progress through it goes that much faster and hopefully that much more effective. So concierge service, we give a money back guarantee. So yeah, you're talking about building credit. I may not get the benefit for some period of time. How do I know this is going to actually work out? Well, if you didn't have to worry about that, then the confidence of moving forward in a direction that you know is right, it goes way up. So we take that off the table. Money back guarantee. If after 12 months we have not been able to get your company to an 80 business credit score, 80 is on a 100-point scale, an 80 business credit score, by the way, that's about equal to a 720 FICO score. So in your own mind, you can kind of correlate the two. If we don't get you that within a year, you have the ability to say, I want my money back. Now, that's a powerful statement. So we don't take just anybody. We do want companies who are serious about building business credit, who are willing to commit to working the process with us, who are willing to pay their bills on time or actually a little bit early. So collectively, we're getting towards that end goal. And we have that kind of confidence in doing so that we can put that stamp of a guarantee on it. We apply a couple, we bring in a couple of extra features as well. A application called cash flow mapping. All it does, it really helps you keep track of the amount of money coming in. Unlimited business credit reports, again, another important feature. Imagine just for a second, if you have bad debt in your company, if you could minimize or eliminate bad debt because you had a business credit report before you started doing business with that company. Imagine what that means to your company. Bad debt represents 100% of the sale price. Means all of your margin and all of your expenses are all included in that bad AR. Imagine wiping that out, what that would do for your bottom line. If you don't have any, great. But having unlimited business credit reports allows you to pick and choose who you do business with and the terms under which you might do them. So if you want to do business, a big contract, but the credit report looks terrible, it's COD, Mr. Customer. We're going to deliver it to you, but we want that check, we want that credit card at the time of delivery. Eliminate bad debt. There's one more thing that as a banker, we would sometimes require, and that is a business valuation. In other words, what's the company worth? And the reason we would require it from the banking side is that a company may wish to combine with somebody else. For example, I want to bring on a partner. Well, what's it worth? You got to be able to divide it. Or I want to get rid of a partner. So how do we apportion out what their share is? But more typically, it's I want to merge with somebody. They want to buy me. I want to buy them. Those kinds of activities require a fundamental idea of what is the company worth in the first place. If you don't have that, you're shooting in the dark. But the reason why companies don't do it is it's expensive. It costs anywhere between $7,000 and $15,000 per valuation. And when the bank requires it, you have no choice. Consequently, business owners don't regularly choose to do it because that's an expense. We decided at J. Galt, let's remove that. Let's make it a part of what every company gets. So we do an annual, that's every year, business valuation for our owners. And we like to think that that's a huge benefit. By the way, one last item on business valuation, and hopefully this is an item you can take away no matter what you decide as far as what happened in today's discussion. It has to do with the one thing we just don't want to think about. It's called estate tax. And the state tax happens when the owner is no longer there. Something happened, something sad. And in the worst of situations, the owner dies, does not have any provisions, and the first person who comes rapping at the door is Uncle Sam. They say, based on the business valuation, we want our estate tax, depending on the state, 30%, 40%, 50% of the valuation. And if you don't have it, Uncle Sam says, that's fine, just go sell the company. Sell off all the assets until you come up with the amount of money that we need. Now, with a business valuation, we strongly encourage the business owners, go talk to your life insurance agent. Start with the business valuation, determine what your state estate tax is, and they can insure you for pennies on the dollar so that your business continues, your employees stay in their role, your customers can continue working with the business that's there. So again, very important reasons why this particular item in particular is so very, very important. So again, through a lifetime membership, you get lots of benefits that go throughout the life of the actual membership itself. So with that, we just want to say, thanks for listening to all this. I think there's a couple of questions that came up in the chat, and if I can pull them up, I'll see if I can answer. So one of the questions, and Cheryl, thank you for your question. Let's see, the question is regarding a business credit report. Is the other business informed that the credit report is being requested? Great question. Unlike your FICO score, your personal score, every time your FICO score, your credit score is pulled, it will actually decrease your credit. On the business side, One, it will not decrease the credit. And secondly, the owner of the company won't even know it. So, Cheryl, this is a great question. Let me pose a question to you. Knowing that anybody can pull a business credit score on your company, and if you're like the majority of people, imagine if you never paid attention to your business credit score. What would another company find out about you? Would it look good? Would it be something you're proud of to represent as a credential? Or would it be something that you kind of hope and pray that nobody will actually find out? So very, very important. And I see Brett already answered that question, but just some things that just to consider. If you have any other questions that you want to put in the chat, feel free to do so. Otherwise, so Cody, maybe we can ask you to maybe summarize some of this, and I will stop sharing so you can do that.
Absolutely. Well, hi, everybody. I'm actually one of our, I work directly with Gary a lot and also with Brent, and I'm actually in Milwaukee, Wisconsin. So I'm not too far off from North Dakota. Just a 10-hour drive will get me in there. No big deal. But Gary, what Gary really put across today is hopefully this isn't fully new information, but at the same time, so you can tell there's probably some things that he spoke about, especially from his background, that really could add a lot of value to what you guys are trying to implement. And I don't necessarily know what every business you guys run, but at the same time, we're really grateful for the greenhouse and Patrick to let us come in here and speak about this. And if there are any other questions, feel free to speak up and we can kind of go about that. But I wanted to just make a note as we move forward here. If something that you would love to see is your business credit report, we are offering to anyone who watches this video or is here today to run your business credit report for you and show and walk you through exactly what it says. And this isn't our opinion of what it says. This is what the credit bureaus are saying about you. So if that's something of value, you can get with Patrick and he can schedule a meeting with us to actually walk through that with you. So other than that, did anyone have any questions?
Yeah, I have one for you, Cody.
Yeah.
Obviously, you know, small business owners, many times they have really strong relationships with a bank or two. So does J Galt establish, what's kind of your role as far as with banking relationships or kind of actually getting access to that credit, maybe through a bank or helping with that? Or
Gary, you want to answer this one or you want me?
Sure.
Okay.
So coming from the bank's perspective, one thing that we say at J Galt, the first place we direct anyone to go get credit is go back to your banker. Talk to them. So think about the bank's perspective on all of this. I think it'll make it very, very clear. So it's a great question, Patrick. First of all, if you go to the bank and say, can you give me a loan? That's a very specific ask. If the bank says no, and by the way, the tendency these days has been increasingly saying no, does the business owner say, okay, well, thanks, I just won't take the loan? No. They say, I'm going to find a loan because I have a very specific business purpose for it. What happens is that the bank then, by saying no, is encouraging the business owner to find another source, and that other source will say, sure, we'll give you a loan, but you have to bring your deposit relationship and your cash management relationship. Two of the three sources of revenue for a bank. So they say no to one, but they lose all three. Terrible situation. So we at J Galt say, hey, wait a minute, go talk to your banker first. If they say no, let us work with you to find alternative ways that we can help address the credit need, but keep your banking relationship. Don't move your deposits and don't move your cash management relationship unless you absolutely have to. Let us work with you to help you get there. So yeah, we do try to preserve the banking relationship as much as we can. And we like to think that with a little bit of time, we can improve the credit profile so they can come back to their bank and have that bank say yes. So it's all about preserving the relationship. So great question.
Yeah, I don't need to add anything to that. That was perfect. So anyone else have any questions? You guys just get it. I love it.
I'll throw one more out there for you, Cody.
Yeah.
What's the biggest kind of setback or hindrance you see that doesn't allow you guys to run this process to hit that 80 mark with somebody within a year? What are the biggest challenges that you've seen, real life experiences?
That is a great question. And it comes down to actually running your business like a business and running a legitimate business in the sense of it, because the dynamic of building corporate credit is all about utilization, payoff, on time, positively reporting. to the business credit bureaus. Now, the problem is if you don't pay your bills on time, we can't help you. We need to make sure that you're paying your bills on time or early to be able to do that. But that's where working with the credit analyst, this is why we built there was a problem, we created a solution, and this is what we've seen benefit lots and lots of business owners. But the cash flow mapping software is great to figure out, to make sure if you're actually cash flow positive and you can pay your bills on time, you can start to think about it logically. If any of you guys have ever done a personal budget, it's great to have a budget for your business too, to make sure that you're not just running in the red all the time. But that's kind of where our credit analysts come in to guide you and coach you. So it's the people that don't have intentions to actually pay their bills, the ones that might be running an under the table business. Like, we want to work with legitimate business owners that have legitimate business intent to grow and scale at the rate they want to. And that's kind of the way that I would look at it. It's mostly the biggest hindrance we see is that problem of not paying your bills on time. So that's important, no matter if you're personal or business. So anything else, Gary, on that one, or is that?
Oh, it's right on.
Dave, do you have any questions? I see you sitting there. You got a nice red shirt. I'm curious.
I had a random question about whatever happened to TransUnion, but that's, probably they got absorbed by someone.
Yeah, Gary,
So TransUnion is on the personal side. Okay, so
Okay.
we're talking more on the business credit side. So that's
Sure.
where the DNB, Experian, and Equifax come in. But no,
Got it.
TransUnion,
Okay.
I believe, is still working on FICO.
Okay,
Yep.
got it. Sounds good. My perspective, this is fantastic in terms of getting into that business credit, corporate credit. I work with clients and small business that, exactly like Gary said early on, they basically have to, out of necessity, they have to do credit off their social security number. Now they're basically out of choice, trying to get to that next level. And so, great food for thought in terms of getting, small businesses that want to become larger businesses to that next level relative to a healthier score or better credit, whether it's at the business credit level or the corporate credit. So appreciate all the insight and the information.
I love that. And what do you do exactly, Dave?
A financial planner.
Beautiful. Okay. Yeah, absolutely. You're digging in that stuff with these business owners, making sure of it.
Absolutely.
Well,
And talking, business startup, as well as, exit strategy or succession planning is what I really should call that. Cause it's not always an exit strategy. It's, is it a LLC, S Corp? Is there a buy sell agreement? Or a lot of times none of that stuff was ever thought through. So therefore now what, right?
100%. I always tell everybody when I sit down with business owners and go through this stuff, I always talk about, like we talked about, banking relationships, and my conversation I always lead to isn't having choices a great option? Wouldn't you rather have access and not need than need and not have access? Like, that's really the big thing. If you have a great relationship, our first goal is to lead you back to that relationship, but let us help you prop up, or just have the thought process and educate wise to know that, hey, if you ever run into a roadblock, know there's other options. You don't always have to dissolve your company because you can't get access to credit. There's options that'll allow you to, and especially everybody on here, if you guys are small business owners, work with small business owners, you know a small business owner. Small business owners are the backbone of America. Can we agree or disagree on that? I mean, realistically, small business owners are the people who are there in the grind, running it. They put in the long hours. They do what they have to do. And I feel like, not me, this is actually from business owners I talk to. They feel like they got the short end of the stick when it comes to this stuff. They go to the bank and they get denied, or they get a fraction of what they need because they aren't aware of this information. So the more that we can spread this out to you guys, and like I said, yes, we have a platform, we have a service. Absolutely, you want to talk about it, we can. But at a minimum, we can get you out there empowered with this information. What does that do for your surrounding businesses, the people you talk to, and the friends that run businesses as well? That could change the way they run their business. And Gary, Brent, and I have all heard plenty of stories now of people who are on the brink of feeling this is the last straw, and then they heard this information, we're like, wait, there's another aspect here. It's the same concept of if someone goes to their doctor and they have some heart issues and they know they need to go do cardio, and their doctor looks at them and says, if you just do cardio, you most likely have a 98% chance of living longer. They're like, oh, there's hope. I've been feeling this pain. Now there's hope. We're hope givers here. That's really what we're doing. So Alex, you have the other red shirt. I want to hear from you. You got the Rolling Stones on too. I like it. It's okay. You're muted. I'll try to read your lips. Can you get it? Here, I'll see if I can push it for you. There you go.
There, did that work? Sorry about that. This was all really great information. I honestly feel kind of embarrassed saying this, but I didn't know that there was a business credit report separate, and need to put a ton of effort into getting this all squared away.
Absolutely. I like it. What do you do, by the way, Alex?
I have a sign company out in Bismarck Sign Co.
Nice. Okay. How long you been in business?
Just about 6 years.
Amazing. And you wouldn't, I believe that you wouldn't have the success you are currently. I mean, you've been around 6 years. That says a lot about your business and your growth. So hopefully this information is valuable for you. And like I said, get back with Patrick. He can have you hook up. We can get you a free credit report for you just for having a conversation and jumping on this meeting with us. So completely. Anyone else have any questions or? Cheryl, I might call
Hello.
you. You got a red shirt too. I don't know. Oh,
I do. I had actually thought I might answer Gary's rhetorical question regarding what would your business credit report say. Brett knows that I'm a bankruptcy attorney for debtors. So my interest in this is more professional and nice to have it on a federal holiday. Because I am less than business casual today.
You're okay.
So this is much more for my interest in the work that I do.
I love it. I love it. Tanette, I think it is. I heard you speaking up a little bit.
Yeah, I think the information that's been shared has been awesome. I mean, I knew about the business credit, but I guess I've never really seen how this can help me as a small business owner. And I'm on year 2 and I'm in the childcare area. Is that something that you've seen before where you work with childcare providers?
100%. Actually, childcare is there's a lot of overhead in that. You got a lot of government regulations you have to stand by. I used to work a lot with ADT commercial with security systems, and I know that your fire systems in your buildings aren't cheap either. So 100%. And what I led back to what I first said with Dave, and I mentioned how it's utilization payoff on time reported to the business credit bureaus. You did it in personal. You realize that's how you built your personal is you utilized and paid off on time, and it just magically reported to TransUnion, right? And that's why you have a personal credit score. We also didn't do it with one credit card. You did it with multiples. It's the same in business, and that's the strategy is understanding one little secret that we have, like kind of Gary alluded to, is we know what institutions report to what credit bureaus, and we know the underwriting criteria, approval guidelines for those. So when we do it, we focus on all 3 legs of the stool at the same time. And that's really where someone like you, Tanette, where you go in and you start to strategize these tools. That means within a 12-month period, you're going to start having some full-scale corporate access to take care of some of those heavy expenses, even if you plan on growing and expanding. And this is why we're in a broad setting. I always like to have that one-on-one conversation to really hear where you're going. If that's valuable, we can have that. But yes, to answer your question, long answer or long answer to a short question, but hopefully that adds some value to you as well. But yes. So
Okay, thank you.
Anyone else? Otherwise, I can give it to Patrick.
Yeah, any other questions?
I have one.
Yes.
Again, hi everyone, Brett with Jay Galt. Can you tell me how this works out if you have a business that wants to do some government contracts? Can you guys talk to me about that at all? Does the government use credit at all to background check anything?
100%. Gary, you got anything on that one? Details?
Well, not only is that the case, but I'll take it one step further and imagine that you operate a not-for-profit, a nonprofit business. So here's the context here. So think about how nonprofits get their money. Sometimes it's donations, but a lot of times it's through grants. They're applying for grants, and they apply to other companies for grants. Now, if you're a grantor, it's always good to kind of flip the role. You're a grantor, and you're going to give money to, let's say, Patrick. Patrick's running a nonprofit. And you want to make sure that if the money goes to Patrick, will his company be in business after you gave them the grants? Because imagine the worst thing possible, which is that he gets the grant and goes out of business. Talk about an embarrassment for a grantor. So you are definitely going to pull the credit score of the nonprofit, provided they have one. And if they don't, what's the likelihood that a grant's going to come your way? So it's so essential in so many parts, whether it's federal government, state government, nonprofit. it's a part of the way people operate. And it's just good to know that that's the case. You can tend to it or you can ignore it. It's up to you.
100%. 100%. Hopefully that answers that question. Patrick? Anything else on your end? Any other questions?
All right, no, obviously, we at the greenhouse work with dozens of anywhere from small to large business owners all around the country. So, what you guys offer, I mean, just looking at the 4 things I wrote down, reducing your personal liability, the free business valuation that you guys offer, the free business credit report, and then, I mean, the thing that trumps all of it is money back guarantee. If you guys can't get someone to that point they need to be at within a year, I mean, you get your money back. So to me, it's a awesome option to start taking all that liability off of you, your family, I mean, everything that you've personally built, and just put it on the business itself and the assets maybe that you have.
100%. And so I got a question for you guys still on. I mean, any of you guys would value seeing your business credit report? Anybody? You want to see it? Get with Patrick and help you get it. Just read.
I would say,
yes.
I'm sorry. I was going to say I would, but I honestly don't think I have any. So
And we can find out. You'd be surprised. Sometimes I get people that don't think they have any and they have some. Even if it's $1,000, it's still something.
Okay.
Then what you can do is, and we can walk you through what it would look like to actually build it, where you could go based off of your specific situation, what you're utilizing, what you'd be paying off, how we could leverage those things, and how you could put it in a 12-month track record or a 12-month progression. Because the dynamic is, I mean, if you don't do anything about it, nothing's going to happen. And if anything, it might actually get worse. And I'll tell one quick story. I've had people that I've sat down with that when we pulled their business credit report, there were things on there that weren't true. And it was hurting them. And they were working with government contracts. They were wondering why they weren't getting them. And we found out why. Is because there was a company, a very reputable company that we worked with that had 5 different profiles with Dun & Bradstreet, and all of them were wrong. Now, what does it take? Have you guys ever dealt with Dun & Bradstreet? Nothing wrong with them, but it can be a little bit of a challenge to get those things removed. So that's kind of why we created the platform we did, is to educate. And also, if someone wants us just to take care of it, we go in there, we fix those issues, and we make sure that you look like a credible, fundable business. So in 12 months, you're at the top tier of fundability, and then we focus on borrowing power. What's your next goal? Do you want to acquire that company? Do you want to expand your business? What are the goals of the company? And that's where we really have fun kind of diving into that stuff. And we become full-on business strategy coaches at that point. And we really help you get where you are to where you want to go. And so I'll kind of leave you guys with this. I mean, I would hope that if you guys are in business, or you know someone who runs a business, that knowing that just that foundation of where they're at, like a GPS, would be very valuable. And I'd recommend you do reach out to Patrick. He can get you hooked up with us to get that credit report run for you, because we get to do that. So that's fun. That's our space. But at a minimum, I recommend that you guys really think about this stuff and dive in and do your homework. And if you look for corporate credit online, you're probably not going to find too much, but there is some stuff out there, and do your homework. And if you have questions, I mean, Brett's here. He's right in your backyard. I mean, Patrick's here. If you want to reach out to Patrick can reach out to Brett. We can get some questions answered for you. But ultimately, if you find value in a conversation, let's have a conversation. So I'll leave it there.
All right. Awesome. Okay. Cody, Brett, Gary, appreciate it. And as Cody mentioned there at the end, absolutely reach out. We can get you guys in touch with them, and start de-risking your business. Man, we talk with a lot of companies about that. It's all about risk at the end of the day. So,
Patrick, thank you.
Appreciate it.
Okay, awesome. We will shoot out
Thank
this
you.
recording. Gary, Brett, Cody, is that all right if we shoot this out to everybody?
Absolutely.
Okay, awesome. Yeah, we'll get this out, and then we will probably post it on our website as well, and push a little bit more to it. Because yeah, great information that nobody knows really much of anything about. So super, super valuable. So appreciate it, guys.
Thank you.
Thank you.
All right, take care, everybody. Have a great week.
Yeah.